Welcome, episode 12. Listeners, hello.
Greetings, Internet.
Internet,
Hello.
the interwebs. All right, so some news broke that we thought would be interesting to talk about. One, because it's a company that we like and have talked about before. Two, because there are some wide reaching implications on this report, if it's true, from the Financial Times, that ARM is looking to change its business model from, call it a traditional royalty structure, to a percentage of ASP of products in which they sell. So we've talked about, ARM as a licensing company. We did not talk about their business model, but we did outline they have two different types of approaches. They have architecture licensees who pay an upfront fee and then don't pay anything ARM to ARM after that. That includes your Apples, your NVIDIA, Broadcom, actually, which we'll talk about, Marvell, a handful of others, some that are not public, but my suspicion is Google is one of those, and Microsoft is one of those, but no one has ever confirmed that. That's just Ben's speculation. But then you've got a host of companies who are just standard licensees, like Huawei and MediaTek, and a few other companies that, and probably a growing list of automotive companies, I would imagine. Maybe some of the big tech firms as well, who have just standard licenses. And it is to those standard licenses that it sounds like the business model is slightly changing for. And I'm of two minds of this change, but I'll let you sort of go off first with a preamble on kind of your take. I know you tweeted about it, and mentioned a little bit of the implications. So I'll let you start the first reactions to if this is true, ARM's business model change.
My first reaction is, how do I buy stock in Risk Five?
You can't,
That was my
unfortunately.
first, which you can't, but like every Risk Five project out there just looks better and better by the day.
Yeah.
It's just cleaner and simpler. Um, but I have a lot of other reactions too, as I'm sure we're going to get into.
In fact, the risk one, the risk one, I think is an interesting one because, I mean, just as of late, I've had 5, 6 conversations with, call it medium stage, not yet late stage, but medium stage Risk Five companies who, over the past 8 to 10 months, have seen a tremendous amount of momentum in start to take off. I'm not sure. I don't think that's everything related to ARM, but as you know, there is no real Risk Five company shipping in volume yet. There's a handful shipping. There's a lot not shipping yet, working on product. But the ones I've talked to have seen pretty interesting acceleration of demand in their pipeline. So I think some of the theories we've talked about Risk Five are leading in that direction, but there's really not a ton of companies out there.
So yeah, it's a bunch of sides to it, right? So there are companies that just do Risk Five as startups, and yeah, there's a handful I know in the U.S. Um, some of them with very big ambitions, GPUs, CPUs, that kind of stuff, and then there are 1,000 of them in China, mostly doing industrial embedded stuff. Um, but there's also another important component to that is large corporates doing Risk Five, and I was traveling last week. I was in Southern California. I went and talked to a bunch of people, and just the amount of activity and interest in Risk Five, it's just huge. The big corporate chip companies all have advanced stages of Risk Five cores in their chips, and maybe it'll be sitting next to an ARM core, um, but it's still like just an immense amount of momentum
Yeah.
across the ecosystem around Risk Five now.
Yep. So let's get into this. So there's two things. This doesn't surprise me, given that you and I and a lot of other conversations have been looking at how does ARM create a bigger valuation for their business when they IPO. They're just a bit over a $2 billion a year company right now. I remember the days when I used to track them. I'm sure this was your days at Deutsche Bank when they were 600-700 million a year in revenue and licenses. So I mean, decent growth, but we're talking about 10, 12 years um, from then. And it it makes sense, I think, to move to this model because you know IP companies have a range of different things. Several IP companies do this as a part of a percentage. So Qualcomm's licensing business does this, but they have a cap of anywhere from 2.5 to 3.25% depending on the type of a cell phone. That's just for cell phones. I'm sure they have caps for IoT, which is smaller. PC, automotive. There's going to be a cap to their percentage of the sales price. Um, so it makes sense, that they follow kind of a traditional model that people into play. What we don't know, however, is if ARM has a cap or what that looks like. We don't know what percentage of the selling price they're trying to get from. We just know they're moving from a very small percent, call it one ish or lower than 1% to something higher than that.
Yeah, there's a lot we don't know. So we're recording this on March 24th, and we're talking about a story that came out in the Financial Times yesterday, March 23rd, written by Anna Gross, and reputable firm, reputable reporter. Uh, she did a lot of great reporting just to get this far in the story, right? So we don't know much beyond what's in that, except you and I both know something's been in the works. Like we've been hearing a lot of rumblings about this, and we don't know how broad it's going to be. We don't know a lot of the details like cap and the detailed royalty rates. It'll take years for that stuff to come out. Um, but there are a lot of problems with implementation that are going to be really important to how this works out over the long run.
Yeah. There's some implications that I've thought about that kind of intrigue me. Um, one, like let's just say that this has meaningful revenue impact to someone like MediaTek. I would imagine. I mean, again, it's not like MediaTek is up to license up to renew right now. So it's not like ARM can come to somebody who says, "Oh, hey, you have a license. It's at this rate through 2030, but we're going to ask you to change now." Like this is for new licensing or for when those contracts are up for renegotiation, which varies by timeline. So it's not like we'll be able to see any impact to MediaTek or others, but there's both Marvell and Broadcom came to mind for me because both those companies are architecture licensees who, for better or worse, have moved away from custom cores and custom ARM implementations to much more off the shelf IP. And in my mind, I just sort of wonder, do those companies kind of take a look at their roadmaps and say, well, is it worth it perhaps for us to start utilizing our architecture license and starting to invest more in custom cores because that might save them money in the long haul, right? Despite the engineering costs. But I just, point being, I wonder if they pivot back to custom cores just because they either don't like the fees that might get hit to them or they don't like the business model change or something. And so it's just thinking through the ramifications of where this might go. That was one of them. Could it drive architecture licensees who weren't using custom cores back to custom cores was a broad question.
Right. So, file that under a whole list of unintended consequences of all this,
Mm-hmm.
right? I think you're right. A lot of people are going to look at this and say, I'm not going to pay that new rate. I'll just stick with my architectural license if they can still access it. Uh, obviously, my guess is a lot of them are going to look at this and say, "Oh, risk five, time for risk five." Uh, I guess if we take a step back, I've been saying this for a long time, is that ARM's underlying pricing model is upside down, right?
Right.
And right because what's happened over the years is their largest licensees have ended up through just years and years of negotiation have ended up with the lowest effective royalty rates,
Right.
which has penalized all the startups who are coming into the field. And there's obviously been a ton of new semiconductor startups in the last 5-10 years, both in China and here. And they go to ARM, and the upfront terms for ARM are very, very difficult for any new company to swallow. Right? You have big multi-million-dollar upfront payment, and then you have royalty rates that are likely higher than your massive, massive competitor. And that's,
Right.
I think, uh, I understand how ARM ended up there, but I also think it is long term created a big problem for them, which is now taking the shape of Risk V. And I have to think that moving to this model and the extra layer of ARM is going to, license, want to approve who the customers are is a big layer of friction in this whole process, right? Because from the article, it makes it sound like ARM doesn't actually want to sign licenses with the chip designer; it wants to sign licenses with the end customer.
The end customer. Yeah.
And we're going to talk about that in a second, like how that's going to play out. But if I'm a startup, I have to struggle really, really hard just to get my first customer signed up.
Yeah.
And now on top of that, I have to go through some ARM paperwork to get,
Right.
I have to have my customer sign up some ARM paperwork. It's a so in the realm of unintended consequences, does this just even further penalize
Right.
new startups, new companies?
Yeah. Yeah, and I think an example of that point, right, for customers, because this is something I've thought about. So imagine that a lot of automotive companies are going to use ARM products in their cars, do today, and arguably what might increasingly more so. If you buy that chip from NVIDIA, whoever, right, Qualcomm, somebody who supplies those things, I think the question that this brings up is if it is the rate covered with what you're purchasing, which is usually the way that Qualcomm would spin it. Buy a product from us, you're covered in the license fee. But is ARM asking Ford and GM to pay on top of that beyond buying the product from a Qualcomm or an NVIDIA or somebody else, right? We don't know, but that's I think what people have been insinuating is that they're asking the end customer who's purchasing said chip, like you said. And so the end customer in this case is a car OEM, for example.
Right. And I think this also highlights an important difference between what ARM licenses and how Qualcomm licenses, because Qualcomm is essentially licensing pure IP patents,
Right.
while ARM is selling a product and changing its license, trying to change its license terms. And I think that's important because one of the benefits of having a Qualcomm license in the past was that gave you a certain level of protection
Right.
from others who wanted to assert IP against you, right? Your tiny handset company,
Yep.
some IP lawyer comes and says, "Hey, you're infringing on this patent I bought in a men's room in Oklahoma 20 years ago," uh, right? And the handset company can say, "No, no, that's Qualcomm's IP. I'm covered by that," and it's in
Yep.
Qualcomm's interest to scare away those people because they don't want their patents threatened, right? So you have a you have a roof, you have a backing.
Yep.
In ARM's case, like, is that gonna pertain? Like, it's not, you're not really getting IP, the same kind of IP. You're getting a product,
Yep.
and uh, right, so you're just gonna value it on just the product, the product itself, and you're gonna make rational economic calculations around that,
Yeah.
which may lead to some other conclusions.
Right. Yeah. I mean, I think we've talked about this a lot. The unintended consequences of this is something I keep thinking about. But that being said, you know, ARM wants to IPO. They want to grow the business. I just think it's fundamentally very difficult with their current business model. So it's kind of like, what do you do? Like, what are your options here? Like, this is one of the ways that they've either concluded or are pursuing. Perhaps there's others, but within the vein of they have to do something, right? They're just not going to grow to a whatever valuations being speculated about them right now. Let's just say in the 30 to $50 billion range. But even before that, right, when they wanted to sell to NVIDIA, they were selling at north of 40, which still to me was a remarkable number, given that they're a $2 billion a year company annually in terms of upside. I think ARM has upside, revenue growth upside in terms of these areas. I think the business model is a really interesting question because the way it is today is not going to lead to that kind of growth or that valuation. It has to come from some change, and that's why I think there's angst here to do something because it's somewhat necessary.
So let me address that specific, and then I have a second part I want to come back to, which the specifics of this. I'm curious, why didn't ARM just raise its prices? Right? It said, today it's a penny a core, tomorrow it's 2 cents a core.
Mm-hmm.
I I think they are effectively, well, in some senses they were a monopoly. Just raise their prices, right? There's that it seems to me that would have been much simpler, much cleaner approach rather than reworking the whole engine. Just sort of raise prices. I think there's scope to do that, and people would grumble and complain about it, but it would have been
Right.
simpler at some level. I'm sure for the salesperson trying to get that contract closed, it won't be simpler, but for
Right.
broad perspective, it's simpler. So I wonder why not just do that. Second, I think you're getting to the root of the issue, which is the IPO is coming. And certainly the FT article makes it sound a lot like the prime motivator behind this move is SoftBank and Masa-san, right? Who really, they have a lot of incentives to gin up the value, the company's prospects to get a bigger, better valuation, which is also a better exit for them. And that seems really, really um, scary. That seems
Yeah.
like it's gonna I mean, I think we talked about this. I wrote a book about IPOs, right? And my main conclusion in the IPO was be very careful when you IPO because all the people surrounding you as a CEO in your decision making ahead of the IPO have an incentive to jack up the valuation at the IPO because they're all
Yeah.
leaving. And that comes at the cost of all the people who are coming in the door. And you as a CEO are really, really going to be dependent on those newcomers, for your professional happiness for the next few years. But all your incentives and all the people around you prior to the IPO have very, very different set of incentives. And
Yep.
it feels like that is exactly what's playing out here. Only it's not one VC on the board trying to, hey, raise your out year revenue forecast a little bit. Like this is like
Right.
let's redo the whole business to make it seem spectacular.
Right.
It's a lot like trying to fix a car that's running down the freeway at 80 miles an hour
Yeah.
and replace the engine.
Yeah. No, I agree with you in terms of the question on pricing. I mean, I just keep coming back to it's alluring to say I'm going to get X% of a $15,000 car or a $30,000 car. And in my mind, like the thing that I keep coming back to is, I mean, I know at least the vague timelines of a lot of their main licensees today, and none of them are up for renegotiation anytime soon. So who like in the short term of the next couple of years can they get additive value from? It's not going to be people who pay them contracts today. It's got to be somebody else. And that's why I think this is part of that. We want to negotiate with Ford, with GM, with Microsoft or whoever at a hyperscaler and have those Facebook, right? I mean, whatever, and try to get some more immediate value out of them if they can, because where else are they going to get it in the next few years? Their growth has been relatively modest on an annual basis, which is not going to do great for investors at an IPO.
Okay, but you could also deliver new products with features that people need and uh, convince them to pay more for it, which I think you could also call to sort of, run your business
Product,
well.
yeah, product strategy, yeah,
Just, I think that's going to lead to a lot less heartbreak.
yeah. You're right.
I'll tell you my biggest concern about this move, and I admit, I don't understand all of the details of it, but changing your model like this is very, very hard to implement from practical terms,
Yes.
right? And I know everyone's saying, "Oh, this is what Qualcomm does. Let's just use Qualcomm's model." Yeah, except it's ignoring 20 years of some of the most bitter litigation in all of tech. That's all it took for Qualcomm to get that model, right?
Yep.
Qualcomm wasn't just handed it and said, "Oh, let's do it this way." They had to fight brutally to get there. And now ARM wants to put that in place while getting ready to IPO and
Right.
expect it to go
Right.
well.
Right.
I guess I just don't understand, like, what's the sales mechanism for that? What's the go to market motion for that?
Yep.
Right? You have an ARM salesperson who now has to go call on automotive companies and handset companies and electronics companies, some of whom, you know, may have heard of ARM before, some of whom may not. I wrote about this when the rumor first popped up when the Qualcomm countersuit came out, right? What is that conversation? You're a purchasing guy at some industrial company, and someone from ARM comes up and says, "Hey, you need to sign a license with us if you want to buy your chips." So now that purchasing person has to go to his CFO and, "Hey, CFO, Miss CFO, we got this ARM people coming up, showing up. They want us to sign a license." Like, it's just that's hard enough to do, right? To have
Yeah.
that conversation, and then just sort of thinking through, like, any large industrial company is gonna it takes 9 months to get onboarded to their payable system, plus, however long to negotiate the contract, years,
Yep.
right? So
Yep.
doing this ahead of the IPO to gin up the IPO valuation is counterproductive at best. If it's going to be very, very hard, just in practical terms. Like, how do you actually put that in place, right?
Yep.
And I know ARM talks to the car companies and the server manufacturers, but, like, having technology conversations with them is very, very different from showing up with, a salesperson and a licensing
Yeah.
attorney
Yeah.
and a
Yep.
pile of papers to sign.
Yeah, no, exactly. And I think the most important, point you made is one, the distinction in Qualcomm's patents, because again, you're not like just you're buying a product, but you're getting a license to SEPs, standard essential patents, et cetera, for a whole range of things. Like that's important. You're not getting anything like that, right, from ARM in terms of the overall IP. But I agree with you in terms of V10 comes out or next version of data center product, charge a little bit more for those, right? Make sure that those are well valued. It is a right approach, but it maybe they'll change. But I am worried that if the fundamentals of said IPO are too inflated and it hits some issues in the market, that's going to look pretty bad in a lot of different aspects.
Yes. I actually think you just hit on the key thing is when Qualcomm did it, they could always revert to say, look, it's in the standard. You don't want to sign our license, but this is our patent and it's in the standards. You have to do it, right? And they always had that sort of foundation, the backing of the standards, the existence of the standards. Set
Yep.
aside the complexities of who wrote the standard, but just that standard was always there as, like, the final backstop. Who's going to backstop ARM, right?
Yeah.
10 years ago, when they really were a monopoly, maybe, but they're not that today, right? Push too hard, and RISC-V just looks better and better.
Yeah.
And just so you know how the IPO plays out in that scenario you just painted, like, that's the reason I wrote the book, is because when I was an analyst, I took so many companies public, and they all made the same mistake, where their VCs and their board said, "Hey, jack up your out year model to gin up the valuation." And they forget the fact that, analysts would just draw a straight line between today's number and tomorrow's number. And
Yeah.
90 days after the IPO, you report your first number and you're already below that trend line,
Yep.
and the valuation sinks. And you do that in the second quarter, you're done. People forget about you. Right?
Yep.
And so it's a really risky game to set up expectations too high.
Yep.
Even if you say it's the out year, people will still do that math, and what you're really losing is credibility with the street. And as a
Excellent.
new company, right? As a new company, even ARM, who's been around for a long time and people know a bit better, it's still a new management team. Like, this
Yep.
CEO hasn't been in front of the street before.
Yep.
He's going to have to convince investors that he's reliable and he's credible. And if you miss your number because you're have all these grand notions of your value of your model long term, you get relegated to sort of the ignore pile. very, very
Yeah.
quickly.
Yeah.
And
That
I
is
think
amidst
that's,
one of my biggest concerns. That
yeah,
it's executive hot seat for many quarters in a row when the numbers just don't pan out the same way that they expected per IPO, and investors are brutal. I mean, it's a
yeah, yeah.
tough spot to be. So that that to me is an issue. The last point I'll make on this too is like I look at the market from the viewpoint of who is best positioned to compete and compete via true competitive advantage and differentiation. And I do keep coming back to it's those people who have some control of the architecture. And I'll just use this as in the example in servers, right? So there's two companies who I think are not a vertical company like Amazon making a chip, who will be best positioned to sell a third party server chip, and that's Ampere Computing and Nvidia. And what those two companies have in common is they have a custom architecture because they've created something very specific to solve a specific problem. And so I feel this tension between arms saying, well, like, look, we would rather have more standard licensees because we're going to make more money from them. But unfortunately, standard licensees are really not that differentiated in the market. It creates a very vanilla competitive environment compared to what you see where every architecture licensee, for the most part, has a fundamental set of differentiation built in. So the point I'm making is I view a lot of this upside for ARM as the opportunity for architectural licensees, but I just don't feel like that's how they see it. And so I feel there's this friction between where they could really see successes in the market, and I just don't feel like it's going to come from these standard, these just vendor chips or vendor silicon, if you will, who's just getting off the shelf ARM IP.
I think that's a very good analysis. And I'll tell you, the the ecosystem of licensees is always, not always, but usually, certainly over the past few years, has been greatly underwhelmed by the support that ARM gives to the ecosystem.
Yes.
And I think this falls into that exact category where everybody just wants more from ARM, and ARM is not giving that; they're giving this other, models, and they're sort of. I think this will be seen as prioritizing the company and the company's very near-term future at the expense of the ecosystem. And
Yes.
I'm not going to accuse them of doing that, but I certainly think that there are a lot of people in the ecosystem who will absolutely view it that way,
Yep.
with all the ramifications that has on their sort of future planning of products.
Yep. All right. Before we move on, just for timeline wise, so our listeners know, the good news is sometime in this calendar year, we'll have an S1 to analyze and we'll have a IPO. So we will be able to talk about these things with a lot more clarity from both that document and how they perform. But I wanted to shift to the opportunity for IP businesses, and I'm not just going to say pure IP businesses, but businesses also who have a lot of IP. I think this is an interesting conversation. You've got companies who sell products but also license IP. Rambus does this. I know Infineon does this. Obviously, there's companies that just sell licenses, but it's a smaller batch. So we were talking a little bit about this before. What's the potential opportunity here to kind of reinvigorate IP businesses and companies with IP businesses that might not have been the most sexy or attractive part of their P&L?
So I think IP is going to become much more important. It's already plays a huge role, bigger than most people sort of realize. But I think it's going to become a more important, more broadly. We talk a lot about the death of general compute and the move to heterogeneous compute and sort of custom, semi-custom silicon. That's going to favor people who have differentiated IP, right? And so,
Yep.
um, there are companies out there that can license interesting things. Not necessarily a CPU core. Like, we don't need another competitor for ARM, but there are
Right.
other new areas where there is a lot of appeal. AI is the obvious one. but lots of other adjacencies where there's a lot of interesting things happening around IP. And you talk about like chiplets. That's another sort of hot topic. Like chiplets lend themselves really well to IP or SoCs, like being able to compose. We're going to see a lot more, composing of ASICs and SoCs, special purpose chips, and people are going to be able to mix and match. Like chiplet is in physical manifestation of it, but or just IP. You incorporate someone's IP into your chip to create differentiation. That looks a lot more appealing in a custom, semi-custom world. And so, I'm thinking of IP just in the sense of, the kind of IP that we're talking about with ARM, licensing something that other people that's repeatable that other people want to use. Um, and that's going to become important. I also think, we're probably going to head back into another phase of patents and that kind of IP becoming very important. We're certainly seeing a lot of activity around patent filing. So there's two avenues that that need to be explored. Both look increasingly compelling.
I think this conversation, and we've talked about doing a whole episode on this because I think it's a really interesting analysis on the term you used, which is competitive and differentiated IP. I think that gets glossed over or sometimes taken for granted, and it's a really hard problem. And part of this too, which touches on the last thing that you talked about, and I'm really curious about, is what steps the government continues to take to either pass legislation or perhaps go the reverse and make vulnerable IP protection rights. It seems like sometimes there's bills getting floated that actually threaten IP businesses or exploit vulnerabilities. And so how I guess the regulating bodies can play a role in continuing to help protect IP is an important part of that step going forward. Because again, if lawsuits can just happen like crazy, you imagine that IP companies like to sue each other. But the regulation part of that's an interesting one that I keep an eye on too.
Well, there was a big reform of what 5 6 years ago. That sort of I can't remember how long it was. A few years ago, that did away with some of the worst abuses, like the Oklahoma men's room example being one of them. Right?
From
Where
a number on the
there
bathroom stall.
that's right. But IP here. Oh,
Call this
I don't
number.
know how that played out. Anyway, but more seriously, there is yeah, the sort of the real like professional patent, the institutionalized patent trolls. That was an interesting model in the
Right.
teens and is no longer viable because of some pretty seems like pretty reasonable changes to the
Yeah.
patent regime. I don't know about any new policies in the works in the U.S. Um, but I do know there's been some interesting developments in China, and I wrote about this in my newsletter last week. The Wall Street Journal a couple weeks ago did an article basically accusing China's patent system of being rigged against foreigners, and there's something there. But I actually linked to there's a UC Berkeley professor, Mark Cohen, who has worked in the U.S. Trade Representative's office. He's worked in the U.S. Embassy in China. Super knowledgeable guy, and he has all the data, or whatever's now available from China, and he's looked at years and years and years of IP cases in China. Like that's his specialty, and it is
Hmm.
interesting. Like yes, there is some bias against foreigners, but it's not black and white. It's not 100%. There are lots of cases in which foreigners can win, and he goes into all the nuances and all the categories. Sometimes it's easier than others. Uh, there are absolutely some abuses. Uh, Huawei seems to have a bunch of very friendly venues in Guangzhou, its home province. And, there are examples like that, but broadly, it seems much fairer than you would think. I think when I lived in China in the 90s, and I worked for a company that cared a lot about its patents and its trademarks, and it was always a problem because people were counterfeiting our stuff left and right. Or you could just go down to the silk market and you could buy, you know,
Yeah.
any piece of software you wanted for $1, right? And At the time, there was two approaches that people used to think about it. They said, oh, we can either we're gonna go down to the factory and shut down the factory that's producing the fakes, and that was impossible. The other approach, and I think Microsoft did a lot on this, a few U.S. companies
They
helped a
had
lot with
to.
this, was to say,
Yeah.
look,
Yeah.
let's make IP important in China to Chinese companies, so we don't have to lobby the Chinese government to take care of IP. They'll just want to do it to protect their own constituents, and that's pretty much what's happened. Where we've seen massive increase in patent filings from lots and lots of Chinese companies. Right, I think Huawei is one of the biggest patent filers in the world now. Right, and they've you know they have now there are people in China who care about protecting IP, which didn't really exist 10, 15 years or 20 years ago.
Yeah.
And that's that's progress. That's better than it was. I think it's probably it's not perfect, but it's much better than people think it is.
What's the is there a common business model around the licensing of IP or IP transfer that happens in China? Is it similar to here or completely different?
It's I mean to I don't have a law degree, so to my eyes it looks pretty similar. Um, it's a lot of big corporates filing IP,
Mm.
right? We've seen this like there's these two handset companies, Vivo and Oppo,
Yeah.
right? They're actually owned by the same company. They're all owned by BBK, but they're allowed to operate fairly
Right.
independently,
Right.
and they actually have very different approaches to IP. And I'm going to mess this up, but I think Vivo is the one that has been very, very active in all things IP. They file a lot of their own patents. They've gone out and signed all kinds of license deals around the world. They're very engaged in the patent process. Oppo has taken a different approach. Too soon to tell how that's going to play out for each of them. They're both getting sued by different people around the world. Uh, but I remember a long time ago I talked to a guy who worked at Huawei, and they were suing somebody at the time, I forget who, and he said, why are you guys criticizing us for IP? Like we're just doing what you've shown us to do,
Right.
right? It was very
Right.
much don't hate the player, hate the game.
The game's the
This is the
game.
game. You don't get mad that we're playing it better than you are, right? And so that's a little glib, but it's I think patent licensing in China would look fairly similar until you get to the legal and contractual level.
Yeah.
There's a lot of
Yeah.
similarities.
Well, I think it would be encouraging, honestly, if we did see a little bit of rejuvenation of some IP business models. I mean, there's a lot of companies that have an absurd amount of patents, and you could argue that they're not always getting as much value from them because business models are challenging just around the IP side. But I think it'd be interesting to reinvigorate some elements of that, at least as a business model that's not shunned or looked down upon, if you will, right? Just the opportunity to really commercialize IP.
Yeah, but that's the first bucket of IP I was really thinking of, was not just patents, but actual products that are based on IP, like ARM does, like Siva does, right?
Mm,
That they're providing a product. It's not it's not software as a service. It's not hardware. It's
right,
sort of like
right,
know-how how to do this. And I,
right.
I think we're in a good setup for that. Like I know a company here called Expedera that has this little neural processing unit IP, like really, really, really scalable AI architecture. And they have real customers, right? It's a real
Right,
business, and
right.
I think there's a lot of scope for that as we're trying to build differentiated SoCs. That sort
Mm,
of lends itself well to especially if you're not a chip company, if you're Google or
right,
Amazon, you
right,
don't want to necessarily reinvent the wheel. If there's somebody else out there who has a good piece that you need, just license
right,
it, right? And
right.
I think we don't realize it, but that's been taking place for years. Like mostly it's been sort of hidden under EDA tools, because that's where most of these companies get their
Right,
IP from.
right.
Cadence, Synopsys, Mentor all license all kinds of different kinds of IP. For you don't have to do all the interfaces yourself. It's, you just sort of copy and paste, pay them their license. We think of EDA companies as sort of CAD tools, but a lot of their business is from IP. And it has been for years. We just sort of, it gets lost in it's explaining what EDA does is too hard for most people, including myself. So we
Yes,
don't always
not
look at that IP side of it.
yes. A bit deep in the weeds, probably even for our audience, even though we're might be talking to more technical people. All right, interesting as always. Until next time, thanks for listening, everybody, and we'll talk to you next week.
Bye, everybody.